Thank you for joining Market News with Rodney Lake. This is a regular program for the GW Investment Institute, where we talk about timely market topics. I'm Rodney Lake, the director of the GW Investment Institute. Let's get started. Welcome back to Market News with Rodney Lake. I'm your host, Rodney Lake. Welcome from the GW School of Business, Duquesne Hall studio. Thanks everybody for tuning back in. If you're coming back, and anybody new, thanks for tuning in on YouTube, Spotify, Apple, Amazon, wherever you're listening to this for the podcast world. Today, special day, Berkshire Hathaway just had their annual meeting. So we're going to go over the company. We're going to go over a few points from the annual meeting. Why is this important? Well, part of this annual meeting, it was announced, or Buffett announced that he's going to recommend that he steps down as CEO. We're going to jump into that. But let's talk about Berkshire for a moment as a business. So Berkshire is one of the portfolio holdings of the GW Investment Institute. Remember, this is for entertainment and educational purposes only. So this is the GW Investment Institute framework, where we're going to overview the business, the management, the price valuation, and the balance sheet. We're going to talk about the annual meeting as well. We're going to talk about the future of this company, because likely it's going to be very different, or at least somewhat different, from where we are now with Warren Buffett as CEO. And again, we're going to get into that when we get into the management section. So Berkshire is an enormous company, and we're going to get into the annual meeting. It is one of the one of the very few non-tech companies that's over $1 trillion in the market cap. So let's just tackle some of the stats. So when we talk about Berkshire, it is a multi-diversified company. It has holdings in a variety of different areas. Railroads, insurance, obviously has a big portfolio, Apple being the largest single holding there, even after they sold shares. So it's in a variety of different businesses, and it has long-term holds in companies like Coca-Cola, which is another portfolio company for the GW Investment Institute portfolios, as an example, as well as American Express. So let's talk about where they are right now. So when you look at the market cap, you're talking about a company that's $1.1 trillion. This is as of early May, just after the annual meeting in Omaha, Nebraska. So again, this is an enormous company. One of the things we'll talk about here on the management side is they have not paid dividends. So when you talk about, okay, well, what's the dividend strategy for this company for management? There is no dividend. The idea there was that Buffett each year, would be able to figure out ways to reinvest that capital, and that's a more efficient way to do it. And also, when there was an opportunity, they could also buy back shares. And so they talked around about 1.2 times book. Right now, it's trading at almost 1.7 times book. So there hasn't been any share buybacks recently. And we'll talk about that when we talk about the balance sheet. The cash has been piling up. And that's a concern for many investors who are thinking, well, maybe you should pay dividends then if you can't find places for this, if they're not acting quite as quickly as they have in the past. We'll see. But now there's going to be certainly a change in the guard there. So let's jump in, a little bit further on the business. So on the operation side, obviously the insurance piece here is a big part of that. And at the annual meeting, we'll lace in some of the annual meeting as we talk here. You had Ajit, Jain, who is the head of the insurance part of that business. And one of the things that I would like to highlight from the annual meeting that's tied to the business section of Berkshire Hathaway is Geico. Geico was having some trouble, finding its footing, and they talked about this at the annual meeting, that at various times along the way, Geico has, lost its way in different, scenarios. And Buffett talks all the way back to, the opportune time that he had where he was in New York, and he took the train down to D.C., knocked on the door, was able to get in and to really, talk to someone at Geico and really understand that business. And so, obviously it's a long-term hold for them. They bought part of the company, 50%, and then the rest of the company later on. This is a very important business for Berkshire Hathaway, and it's I think a clear window into sort of what maybe the new Berkshire will look like. And so Todd Combs, who was one of the portfolio managers that was added along with Ted Wesser a few years ago to help manage the stocks and the portfolio companies for Berkshire Hathaway on the investment side, was put in charge of this operation. They had 50,000 people. He cut that by 20,000. That's a huge number. So they're getting efficiencies. And Ajit Jain during the meeting is saying that they're getting a combined ratio, which shows the efficiency for the business. Anything over 1 is that it's not profitable, and anything under 1 is profitable. And so they said they had an 8 in front of that number, and so that would be outstanding. And he had mentioned Ajit Jain that that's maybe the first time ever. I can't remember the exact words, so I'm paraphrasing there. But certainly, it's something that's significant when you talk about the turnaround in non-operations. And it sounds like, in his also paraphrasing in his words, that they had work to do on the AI piece of the equation of what other companies are doing. And you can think of a company like Tesla that offers their own insurance on their vehicles, that's getting real-time data from their vehicles and also getting something called a safety score that's in beta version. And so I would say that it's unlikely that Geico's in the same place because they don't have the same technology deployed, and they certainly don't have their own vehicles. But Ajit Jain is saying that they have made great progress with Todd Combs at the helm of this business, and they're going to continue to. And I think that's a good testament to the culture at Berkshire to eliminate bureaucracy. Buffett was asked about his feelings on Doge, and he said, "Why don't you ask me a tough question?" Now Becky Quick asked this question, obviously being a little facetious there. But effectively, he didn't, wasn't strongly worded, but essentially said that, there is no check on government spending, and effectively said that someone has to do this to try to rein in, and the deficit spending is not healthy for the country and not healthy for the currency of a country, and specifically, obviously, for the U.S. And so bureaucracy in all of its forms, including inside the company, not good. And they talked about eliminating that at Geico, and that's a good thing. And Todd Combs, gets a lot of credit. Again, this is from Ajit Jain, but they certainly have made big progress in that business. And so I think that is maybe a window into the way that Berkshire is going to be running without Buffett. So let's jump now into management, and we'll probably come back to business possible. But let's now talk about management. And again, we're interlacing the annual meeting along with the company here for this episode because it's so recent off the Berkshire Hathaway meeting. People talk about this as the Woodstock for capitalists to go out there. And I would like to also thank Steve Ross, who's an advisory board member for the GW Investment Institute, who always shares his notes. And so thank you, Steve, for sharing those notes. Very much appreciated. And certainly your take on this meeting is always important. Thank you. So one of the things, from the meeting that came as a surprise, I think specifically in the timeline, but not in, let's say, in the macro sense, in the micro sense. In the macro sense, Buffett's 94 years old. Charlie Munger, unfortunately, passed away, recently. So he was 99. Buffett's 94. Not a shocker that at some point soon, Buffett's probably going to move on. But many people didn't expect at this specific meeting that he would make this announcement. But he made this announcement by the end of the year. He's recommending that Greg Abel succeed him as CEO. That has now been made the case. And so after the meeting that came out, that will in fact happen. Buffett will move to chairman as part of this transition. And Greg Abel will become the CEO on January 1st, 2026. And so that is a big change. And again, in the grand scheme of things, when you think about, Berkshire Hathaway, and you think about Buffett, that's not a total surprise. At 94 years old, you're expecting at some point there's going to be a transition here. But again, at the meeting, that came a bit of a surprise for everyone. So now, as investors, you really have to start thinking about, okay, Greg Abel, Ajit Jain, Todd Combs, Ted Weschler, is this the crew that you want to keep your dollars invested with at Berkshire? And I would say in the short term, again, not investment advice, so far it is. And now these are the things you have to figure out. I think the story about what happened at Geico is also important to understand and to see, okay, well, what's this next group that's already been working there, by the way, and how they're going to manage moving forward. And it looks like they're, doing an excellent job if you use that as one example. And Greg Abel certainly has been an operator. Now, is Greg Abel going to be the same type of CEO as Buffett? Seems very unlikely. Buffett's a very unique individual. He gave credit to Tim Cook at the meeting as the only person who could have taken Apple from where it was to where it is now, and gave credit to Steve Jobs as being the singular person that could get Apple to where it was before he passed away. And so certainly it seems like he's giving, maybe that was sort of a parallel story that he was providing to talk about, maybe he's trying to give confidence for everyone, for Greg Abel, that he can do something similar to what that transition looked like from Steve Jobs to Tim Cook, and maybe, and so possibly Greg Abel will be a very different type of CEO than Buffett, but could be very effective. And so let's use this example. If you rewind history, and unfortunately Steve Jobs passed away early, and Tim Cook took over, and many people thought, okay, that's it for Apple. Apple is, it was a great run. Steve Jobs was a visionary. There is no one that can really replace Steve Jobs, and that is true, very likely. However, what was missed, especially at the time, is that you didn't have to have the next Steve Jobs. You needed the next Tim Cook to run the company, to make it more efficient, to increase the profitability for the company, to expand the services that they were offering. That person, Tim Cook, did a fantastic job. And so it doesn't mean that, Greg Abel, if you use that as an analogy, it doesn't mean that Greg Abel is going to succeed in the same ways that Buffett does, but it doesn't necessarily mean that is not the only path for success. And so if you certainly look at what was built up over time at Apple by Steve Jobs, and you look at what's happening now with Tim Cook, or has happened, you certainly can think of scenarios where Greg Abel can take what has been built by Buffett and company and take that to the next level. Now, what does that mean? Now, this is the open question, and this is what we all as analysts have to figure out. So we own shares in the GW Student Investment Funds as part of the Investment Institute, and many people own shares of Berkshire Hathaway. Many people go out to the annual meeting in Omaha for that very reason, to hear directly from Warren Buffett during the Q&A session here. So how do we do that? Well, obviously, we're going to have to start paying close attention to the decisions that Greg Abel is making, the type of capital allocation decisions. One of the big things that people are going to be watching closely is Berkshire Hathaway going to change their dividend policy? So they've been piling up cash, now over $300 billion in cash. And that's more than most of the tech companies that have on their balance sheet. And for certainly, if you include the Mag 7, it's close to, more than what they all have combined on their balance sheet at the moment. So it's a very significant number. And so what do you do with all that cash? Certainly there's going to be acquisitions and certainly investments. When you talk about, Greg Abel was involved in the 5 trading companies that they deployed capital in Japan, and so far that has worked. And the way that they finance that has worked and has been clever. So those are great things, and they're increasing the stakes in those companies. But when you talk about $300 billion that you have to deploy, you're really, what Buffett talks about, it's the elephant hunting. These have to be big deals to deploy that parts of capital. Now you can buy back shares, but when you're trading at almost 7 times book value, and you're saying we're going to buy back shares at 1.2 times, the cash will continue to pile up. And so obviously dividends might make sense at some point. And we'll have to see. Greg Abel is going to be his own CEO. We'll see what happens there. Tim Cook and Apple, they pay a dividend. Many people thought, okay, these big tech companies wouldn't ever pay dividends, and they certainly do now. Microsoft and Apple does. They're not the Procter and Gambles of the world, but they're certainly paying significant dividends back to shareholders, and Apple is a big share repurchaser as well. So maybe they'll change that price where they feel comfortable buying back shares. So maybe it's not 1.7 times and it's not 1.2 times, but maybe it's 1.3 times. We're willing to buy back shares with all this cash, and so that could also be adjusted. But again, we're going to have to watch closely. The management's super important. Ajit Jain is still there running the insurance business and has been very successful. We gave the Todd Cohn story, what's happening at Geico. That's obviously one of the most publicly facing parts of Berkshire Hathaway that people know. Lots of advertisements for Geico that people follow, and many people have the insurance as well. So on that side, I think it's super important to really pay close attention to the transition. What's going to be happening in the next few months? What's Buffett going to say? What's Greg Abel going to say? What type of acquisitions? What kind of capital allocation deployments they can do? Remember, on the capital allocation, you grow either through investing in the business and getting new products and services to market, in the company directly, organic or the inorganic, the mergers and acquisitions, which obviously Buffett and Berkshire has been famous of. You can also, they have another lever. They can deploy capital by buying pieces of companies like Apple as an example, and Coca-Cola very famously long-term holding at Berkshire Hathaway. So that's another way to do it for them that other companies don't necessarily do it that way. Dividends, which they don't do, share buybacks, what they do, or reducing debt, which is not really something they need to do given that they're piling up all this cash. And so it's going to, be important for us to pay attention as analysts. What's going to happen with the capital allocation decision there? Next up, we're going to talk about the valuation here, the price valuation, and we've already talked about this effectively. The way to look at this company is more on the book value. Because, the types of businesses that it owns, especially around the insurance business, the energy business, book value is probably a better, way to understand this business. And so right now they're trading, again, this is just after the annual meeting in May in 2025, you're trading at 1.7 times book. So historically, this is pretty high, again, or at least on the high side. And they had talked about Buffett, talking about buying back shares at 1.2 times. Not really going to do that here. Near 1.7 times is not something that is going to be, a time to buy back shares. And so there is, questions about what's going to happen in this transition, and I think that likely is going to impact, what's the share price here and what's the market cap from here. And so we'll have to really pay close attention. But on the valuation side, at 1.7 nearly times book value, it's not something that we should spend too much time thinking about in the short term. I think we need to definitely pay close attention to what's happening with Greg Abel and company. Are they planning to buy back shares? Are they planning at a different level? Is it maybe 1.3 times book or 1.35 times book? I'm speculating, complete speculation there. Maybe it's going to remain the same, likely not go lower than that. And the other big thing is, will they pay dividends? This is an open question that many people have asked. And so that's something that we need to pay close attention to. Next up here, let's talk about the balance sheet. We already talked a little bit about that. 300 billion plus on the balance sheet, much more than many of the tech companies that are out there. And some, you combine some of those, it's still more. So this is really a lot of cash. And how productive is that cash? Obviously the interest rates are a little bit higher right now, so you're getting a little bit more for that. But really, that's not the design here. The design here is to deploy that capital, to get that out there, to buy businesses, to help grow this company, to invest in other publicly traded companies. And really, until we see some movement on that, that has been a significant challenge at scale for Berkshire. Again, $1.1 trillion market cap, $300 billion in cash, really plus really having a challenging time to deploy that. So balance sheet, though, obviously we're ranking that super high, a 10. So let's now go through the framework here. One at a time again, just to kind of make sure we touch on everything and get all the scores. And so when you talk about the business, this is a diversified conglomerate, has a bunch of strong brands. And obviously, the brand being one of the big brands being their CEO as an example. But, these are good returns on equity here, the 10 to 12% here. But that you would call that average. But the strong, really like allocation of capital is something that you want to focus on here. So, on the business side, we probably give them, maybe an 8 or between a 7 and 8, something like that. Hard to give a 9 or a 10 on the business side, but you could probably say somewhere between a 7 and an 8. On management, when you talk about now, this makes it a little bit more challenging. You're talking about an 8 or a 9, given that there's some transition time here that we're going to have to think about. Certainly, you can give Buffett a 9 or a 10, no issues there. But this is a transition time. Greg Abel is going to be taking over, has done a very effective job already, and Ajit Jain as well. So, but let's say an 8 or a 9 there. On the price valuation, it's been high, right? It's not super overpriced or anything, but it's on the high end. So you're kind of 7 maybe there. And the balance sheet, probably a 10. So, your weighted score still comes out to like, let's say a 7 or an 8, depending on how we really weight those things and how low we go. So you're 7.5 or something like that. And really the weight on that score is this transition in the management team and the fact that they've piled up so much cash and they're not deploying it as a concern around the management side of that, right? Not the balance sheet. That's a very healthy balance sheet, and you're not worried about that. But the valuation is elevated. The capital allocation is an open question, and then the transition on the management side. And again, the businesses are not high flyers. These are not, NVIDIA with, 70+% gross margins and 55% net margins like a Visa. These are more modest growth businesses at large. Insurance, which is one of the primary businesses, as a reminder, is a commoditized business like Geico. Obviously, you can make money there, but it is not the same type of gross and net margins that you're going to find in NVIDIA and Visa, as an example, or a big tech company like Apple, which they invest in. But overall, that's where you're going to end up with the scores. So these are all very favorable scores. And again, we've laced in the annual meeting and the big announcement that there is going to be a transition from Warren Buffett to Greg Abel at the end of this year. Greg Abel will take over January 1, 2026. We're all going to be paying close attention to what's happening where shareholders at the Investment Institute. We're going to be having our analysts look at this. We wrapped up for this semester as an example. So for the fall, this is one of the things we'll be kicking off with and making sure that we're tackling this and trying to understand, what's the new management team look like? How are they going to be different than Buffett and company? And are we optimistic about them? Do we have confidence in them, or should we do something different with our shares? So that is a wrap for this episode. Thank you for tuning in, and we look forward to seeing you on the next episode of Market News with Rodney Lake. Disclaimer, the content shared in the GW Investment Institute podcast is for informational and educational purposes only and should not be considered investment advice. The opinions expressed in this podcast are those of the host and guest and do not necessarily reflect the views of the GW Investment Institute or the George Washington University. Listeners should not act upon the information provided without seeking professional advice from a qualified financial advisor. Investing involves risks, including the loss of principal. The GW Investment Institute, the George Washington University, and the podcast hosts do not assume any responsibility for any investment decisions made based on the content of this podcast. Always conduct your own research and consult with a financial advisor before making any investment decisions.